Would you like to know how to buy gold and silver? The various ways to do it, the pros, the cons, the fees, and exactly how you can do it? Well, that's what I'm going to show you here. I've outlined 3 different ways and how you can get it done. I'm Brian, welcome to the channel. I always talk about getting people out of debt and then helping them with their financial net worth and their future with passive investments and essentially buying assets. I always like to say the dollar's dead, meaning the dollar goes down in value, so why not purchase assets like we're going to talk about here, commodities, which typically people think about as an inflation hedge. In other words, hopefully, if you convert your dollars into things like gold and silver, over time the gold and silver goes up, and that's been shown. I'll put a link down below to a video where I show that over the last 100 years, the dollar lost 99% of its value, yet gold continued to rise. So you might be thinking in these inflationary times, how can I buy gold and silver? What's the easiest, quickest way? I'm going to walk you through it. I've done all the research so you don't have to. And I always also say, banks don't care about you. The government doesn't care about you. It's up to you to take control of your financial future because financial independence is really true freedom. Okay, so let's go over the 3 different ways with respect to gold and silver. This happens to be May of 2024. From the beginning of this year, I believe gold is up about 20% and silver is up about 50%. Not always the case. You can look at charts over time, but they do beat the dollar. Okay, first one here, we're going to go over physical gold, buying it and having it in your possession. Then we're going to talk about exchange-traded funds. And lastly, this somewhat new method of custodial. All right. Physical gold. And this is just an outline and I'll walk through it. Talking about fees. The thing to know if you look online or you watch a financial channel and you see stock tickers go by and you see, for example, gold price go by and silver price go by, that price that you're seeing is quoted as the price per ounce of gold or ounce of silver, and it's called the spot price. No matter where you go, they're going to reference the spot price. Okay. With physical gold, meaning you're going to go into a gold broker or dealer. Usually they call them bullion dealers. Sometimes they are jewelry shops. And recently, you can go into Costco and buy an ounce of gold. They will have a premium over the spot price because they have to make money. So for example, if gold spot was currently at $2,000 an ounce, some places, I looked online, a very popular online store has $80, they state it, over spot. So the $2,000 ounce of gold would cost you $2,080. So you're hoping that it's going to go up over time, obviously more than $80 because that's your transaction cost, and there will be fees to sell it. Okay, so the fees are usually a premium as a percent or a flat rate, like $80 over the spot price. That's the first thing to know. Next, what type? Now, when it comes to physical, this is interesting. For me, if I'm just investing in gold, I want something as pure as possible because I want everyone to look at this and say, that's as close to an ounce as I can get. So therefore, it goes for the spot price. You'll note, particularly at some of these dealers or online, that it's not just gold bars, like an ounce gold bar. It will also be things like coins. And if you look at the spot price, typically an ounce of gold is the closest thing you'll find to spot. If it's a coin, it can vary greatly. Some people might like the look of what's minted on it, whether it be an eagle or whatever it is. But if you're just looking to invest, oftentimes you just want to go for a bar, and it'll give you like a 99997, which means like 99.97% pure, almost 100% pure gold. And you'll see it typically, gold and silver, like I said, always talked about in ounces. But there's also grams, which are smaller, and kilos, which are larger. And it comes in bars or coins. But just for investment grade, I suggest you go after ounces and bars or whatever they may mint it in to get as close to just a pure piece of gold or a pure piece of silver to mimic spot as much as possible. You don't want to end up with a coin and all of a sudden no one likes your coin and you lose value for that reason. All right, possession, or I should say the pros and the cons. The pros are you have this in your physical possession. A lot of people like that. They want to have that gold bar. They want to have it in their house. They're safe wherever it may be. The other pro is that there are no storage or maintenance fees, and we'll get to that with some of the other methods. So obviously, if it's in your possession and you're storing it, you don't have to pay anyone to store it for you. Now, what are some of the cons of having the physical? Some of the cons are you need to store it, obviously, safely, because you don't want someone to steal it. Speaking of stealing it, you're probably going to want to insure it and get insurance in case of theft or loss. You don't want to lose 5 ounces of gold and be out $10,000 to $12,000, whatever the going price is. It's less liquid than the other things we're going to describe, meaning if you want to sell it, you have to take it to someone who's going to buy it, or ship it to someone who's going to buy it. That takes time, and there's fees to sell as well, so it can have higher selling fees, as well as the fact that it's a little more difficult to sell. When it comes to physical gold, most people are not buying it to sell it a month later, 6 months later, even a year later. This is typically what they might want to hold for a long period of time. And I'll give you a little pro tip. If you were to pass away and hand the gold to your children, they don't have to pay the gains. They get the value, the fair market value of what it is when you hand it to them when you pass away. That's a tax thing you can get into, but that's a good way of avoiding the capital gains. Because if gold goes up, you don't pay anything unless you sell it. Okay, enough about physical. ETFs. Exchange traded funds. You're probably all familiar with those. You can go to your Schwab dealer, your Fidelity dealer, IBKR, whatever it is, those sites, whoever you may use, and you can buy ETFs. For example, there's a couple gold ones, and there's a couple silver ones, but I'm using these two. You can look up GLD for gold or SLV. Now, to note, there's different types of ETFs. When we're talking about just investing in gold or silver, we're talking about a spot ETF, which means they are going to have to hold the gold and silver. When people put in more money, they got to go buy more gold and silver. So the money going in is backed. There's other ETFs, and you want to read in the information before you purchase them, that, for example, might be gold mining ETFs. They're not all backed by gold. Those are completely different. We're just talking about gold and silver spot ETFs, so that when you're purchasing it, you know that they're getting the equivalent amount of gold and silver. Small differential due to maintenance fees, but by and large, it's as close as possible. Okay, so how do you buy those? Well, that's just a share price. And the share price is not directly related to gold and silver. So if gold's $2,400 an ounce, the share isn't $2,400 an ounce. You're just buying a share price. But what you want to know, and you can look, for example, SLV, I'll throw up an image here, but you can see they tell you their net asset value, NAV. What does that mean? If that exchange traded fund were to sell all of the silver that it had, how much money would it have? That's the net asset value. Okay, so you want it to be as close as possible to a 1-to-1. Now, they tell you at the moment, May of 2024, SLV is actually a negative 0.79%. So not even a negative 1%, but that's actually a good thing. That means you can buy it at a discount. So the silver fund is trading at a price slightly lower than its net asset value, which essentially means if silver were $30 an ounce, you might be getting it at, and I'm just making up a number, $29.80, because you're getting a discount. If this number were positive, like plus 1%, that would be a premium, meaning the share price is higher than net asset value. But typically, you just want to see it around zero. It's just on par. Okay, ETFs. Now, how do you buy them? Well, it's not by ounces, not by grams, not by kilos. You're just buying and paying that share price, knowing that it's backed by either gold or silver. Pros. The biggest pro here is that they will say it's liquid, which means you can sell it fast. You go online and you sell it just like you would a stock, or you buy it just like you would a stock. It's going to be an extremely close to spot sale. You're not going to have those fees. Typically, there aren't fees related to buying and selling of it. They have maintenance fees, the ETF itself, but they're typically fairly low, like maybe 0.4 or 0.25%. You can look at the various ones. But you're going to buy and sell extremely close to spot. You're not going to have these $80 premiums for every ounce that you have, either percent or a flat premium. You're not going to have to worry about that on the buying or the selling end. And if you want to find a buyer, it's really easy. You just go on your, let's say, Fidelity, click sell, you're done. You turned it back into cash. And you can buy any amount. So you don't have to buy a gram or an ounce, or whatever it may be. You just buy however much of the shares you want to put in. The con, most people will say, well, it's not in your possession. So you don't actually have the physical gold. You don't actually have the physical silver. For those that want that, you're going to have to get it in your hands, but you're going to pay a premium for that. So the biggest thing about the ETF is fees are low. It's extremely liquid. This is the easiest way to get exposure to gold and silver, particularly if you're just doing it in a time of inflation and you think, you know what, a year from now, 6 months, 12 months, 2 years, I don't know, I might want to get rid of it. I might want to get rid of all of it. And you might have $10, $20, $30, $40, $50,000 worth. It's going to be a lot easier to sell that when you just go online and click sell than it is to walk in somewhere with $50,000 worth of gold and think that you're going to get a really good price on what you're selling. Okay, third option, which is very interesting, and it's a hybrid of these two. I do this myself. This is called Custodial. I believe there's a couple companies doing it. I happen to use one called Vaulted. I've got a link down below. I do believe I get an affiliate fee if you happen to use it, just letting you know. But they have fees on gold and silver, and you can buy gold and silver through them. Okay, they have a 0.8% premium, and in a moment I'm going to show you an example so we can compare apples to apples. So when you buy it and sell it, there's a premium, and then 0.4% maintenance fee, which happens every year, annual fee, because they're storing and holding it for you. Silver is a 2% premium, and the maintenance fee on silver is 0.8%. Just to give you an idea, 0.8% premium, I believe, on $2,000 or probably roughly like $19 or something. Not $80, like an ounce over here. Regardless, the buy price, how are you buying it? Well, you can put in any amount of money. But what they say when you go to click buy, you can buy it at any time, send money via your bank, click buy. The buy price is the wholesale price, which is basically the spot price, plus that premium. So whereas physical might be $80, in this case, depending upon the price, it's more like around $20. So it's a lower premium. But you'll see the buy price, and they break it down before you click purchase. Make sure you're happy with it. Now, when it comes to the type, well, they are physical bars of gold, physical bars of silver. They tell you exactly where the location is, where they're being stored. And when you log into your account, they show you a serial number associated with the gold that's yours and the silver that's yours. Why do they do that? They do that because, we'll get into the pros here. One of the pros is you can have them ship it to you. So you can say, and you have to pay a fee to have it shipped to you, but at any point in the future, you can say, you know what, I have a decent amount of this. I don't think I'm going to sell it anytime soon. I want to have it in my possession. Send me all my gold or all my silver or both. Okay. It's also liquid. I don't know if you would say it's as liquid as an ETF, and I think it is because you can simply just click to sell 24 hours a day or click to buy 24 hours a day, and they'll tell you the price that you're going to get. The sale price is close to spot. Again, it's the wholesale plus the premium. You can buy and sell any amount. And they also have a plan where you can set it such that it pulls a certain amount of money from your bank, and you can dollar cost average. So I currently do it twice a month. It pulls money from my bank, and I say, pull this much out of my bank account, buy this much gold, and buy that much silver. So let's say take $200, buy 100 gold and 100 silver every 2 weeks, for example. So you can set it and forget it. I like that a lot. They show you, like I said, they show you the serial numbers, buy any dollar amount you want, just like an ETF, and you won't have to worry. You don't have to buy an exact ounce or an exact gram, for example. Okay, cons. Well, again, not in your possession. They're holding it for you. But what is interesting is essentially they're holding some that you've purchased and it's sitting there essentially with your name on it as opposed to an ETF. Not sure that really matters, but to some it might, because you might want to ask for it later. There are maintenance and storage fees. There aren't maintenance and storage fees with ETFs. So if you're someone that says, I might want physical, I don't know. Well, you can start with one of these plans and then have it sent to you. However, the easiest of all three is the ETF, because you can go right now through your brokerage and purchase or sell. I happen to do this because at certain points in time, I'm going to get the actual physical gold and silver. I find it to be an easier transaction. I don't want to go to a gold dealer to buy it. I don't want to deal with that, so I do this. However, in times when I want to guard against inflation as an inflation hedge, I also do this, meaning grab ETFs, because I know I can buy and sell and move money in and out really quickly. All right, now I'm going to show you just real quick an example with the fees and how they differ. All right, so here's what I did to take a look at if you were to purchase physical gold in the two different manners of going to a store and buying physical gold or going for this service, Vaulted. And I looked at, on this particular day, the spot price for 1 ounce of gold. I went to an online dealer, an online website. Some of you don't want to go to a physical store, that sort of thing. So I said, okay, let's just say we're doing all of this online. An online dealer, a very popular one, which has great prices, by the way. A lot of people use them. It had $2,343 was the current spot price. At the same time, I looked in the Vaulted app. It was $2,332.50. Very close. What is that? 32 and 43. That's an $11 difference. Okay, not huge, small difference. But that doesn't matter. What matters is the total price. When you go to checkout and you click that button and you're paying, what's the total price going to be? Well, the online dealer, they said they had free shipping because they have to obviously ship it to you. Vaulted's going to hold it for you. But their total price, because they had that $80 premium, was $2,433.89. The Vaulted final price was $2,374. So what's that? 26 and 33. So $59 difference. That's a fairly significant difference. Now this one, it's not in your possession, but they're holding it for you. And if you did want it, you'd have to pay a fee to have it shipped back. This one, you'd actually have it in your possession. So at the end of the day, if you included the fee to have this one shipped to you, it might be about the same. But in this case, as we went over the pros and cons, it's in your possession, you got to store it safely, you might want to get insurance, that sort of thing. And this, they're holding it for you. However, there's an annual maintenance fee or storage fee to hold it. So the prices, all in all, at the end of the day in your hand might be about the same. But I can buy and sell through Vaulted, and I'm saving almost $50 on the buy and probably the sell. One thing, and it's the biggest thing for me personally, is the liquidity. It's as if you walk down the street or drive down the street and you say to yourself, how many places can I buy things? And you look around and you go, oh, I can buy stuff at all these stores. How many places can I sell things? I can't sell things anywhere. Right. Selling is always hard. Buying is always easy. So whenever I personally look to purchase something, I also want to know how easily or quickly am I going to be able to sell it. Sure, I can go to Costco and buy an ounce gold bar. Can I go back and say a year later, would you like to buy my ounce gold bar? They're going to say no. They don't do that. They don't buy, they just sell. So for me, what I really like about Vaulted is that I know what my sale, it's the spot price plus a premium, and I'm going to get that price. ETF, even better. It's going to pretty much be close to spot is the value you're getting when you're selling it. So I hope this has been helpful. Those are the 3 ways to buy and sell gold and silver. It's pretty much all you need to know to get started. Thank you for watching. Please like it if it's been helpful to you. And please also subscribe so you don't miss any of my future videos. And I always appreciate a comment regardless of what it is, even if it's about my horrible appearance, because it helps the algorithm and pushes the video out to more people when they see people are talking about it. So I hope this has been helpful. Thanks for watching.